At the medium case, $809. At the optimistic case, $1,200, which is an 840%.
What you just saw there appeared to be Tom's 5-year Tesla stock price targets. This is from a video that he just did where he broke down Gary Black's 12-month $370 price target that you can see right here. But let's see why Tom thinks that in 5 years, Tesla stock should be at $1,200 in his bull case.
It's an extremely efficient company with video game level numbers. I mean, this is insane. This is like playing Railroad Tycoon on easy mode.
That has to be the absolutely single best way to describe Tesla as a company. Tom did a fantastic job right here. I love Tom.
This is the stock MVP analyst chart. It aggregates all the analysts that are basically covering Tesla just to show you the different target prices. We will run the full evaluation model. I'll tell you my target price in a second. But the first thing, you have to understand what's under the hood of the company. You have to understand the fundamentals of the company. That's really important.
I personally like looking at earnings per share growth and especially how often Tesla beats the Wall Street consensus. And this chart is just my favorite one. The amount of vehicles that Tesla delivered each year, and that growth is just
Revenues for Tesla is $81.5 billion. But if you look at revenues just 5 years ago, they were $12 billion. So clearly you can see the trend here, right? From $12 billion to $81 billion in 5 years. It's 600% up and actually listed here. So you can see that the revenues are more than impressive. The growth for the past year was 51%. That's important.
One thing to keep in mind, though, is even though Tesla aims to increase its deliveries 50% year over year on average over a long period of time, their revenues may not grow at 50% year over year because it may deliver cheaper cars. However, Tesla will get into the energy business, and Elon hinted about HVAC. Elon just tweeted a new tweet, but I'll show you this one first. We will make super efficient home HVAC with HEPA filters one day. And now Elon is teasing us with this. An ideal air conditioner should optimize temperature and humidity while filtering out particulates and pathogens. I think there's a reasonable chance that we may, and I emphasize may, I'm not saying will, I'm saying there's a possibility that at Investor Day, we might see some sort of a prototype perhaps, or if not a prototype, maybe it will be at least mentioned. Either way, it is clear that Tesla, in the long run, will end up making HVACs.
Remember that number 51%, the growth number is going to be a huge element of our valuation, not the sole element. Selling and general expenses. Basically, this is what I call the fat. This is usually where you can trim the most cost if you really were adamant about it. As revenues grew 600% over the past 5 years, SG&A grew about 60% over the past 5 years. So you can see here that this company is generating 600% more sales with only 60% growth in SG&A. In fact, their SG&A have dropped 12.5%. The cost dropped over the past year when they grew 50% sales by 12%.
Yep, if you look, for example, at operating expenses year over year, you can see that in this case, for example, in Q4, operating expenses went down by 16%, and yet revenues grew by 37%. The bears were losing their minds about that. It must be fraud. Tesla must be fudging its numbers. It is impossible to have a genius run the company and then have genius approaches towards running the company. Therefore, it must be all a scam. Of course, they make a huge mistake with their assumptions. They assume that Elon Musk is not a genius. That is their mistake.
These are really impressive numbers. Now, on the operating expenses side, which is where you aggregate all the things that you have to do to generate these revenues, including SG&A, by the way, it's up 1.2% over the past year. You can't find a lot of companies that can give you numbers like that. Over the past 5 years, again, OPEX is up, operating expenses are up 86% versus a 600% increase in revenue. I think the efficiency question here is answered. It's an extremely efficient company with video game level numbers. I mean, this is insane. This is like playing Railroad Tycoon on easy mode.
Facts. It's like Tesla is playing on easy mode while Toyota is not just playing on hard mode, it's playing on dating mode. I mean, that Toyota's numbers right there, right next to these two Teslas, the days are numbered for that Toyota. I mean, until very recently, Toyota has done everything that it can to make sure that it's playing on the dating mode. Although there is perhaps a possibility that there is one more explanation. Maybe they have been watching Steven's videos from this channel right here. So maybe they're just choosing the difficulty mode that's beyond hard and beyond dating. But when you play against Tesla, really the difficulty mode that you're playing on is emotional damage.
One important thing here is looking at the increase in EBITDA. Increase in EBITDA is super important for our DCF. Coming up in a second, we have a DCF calculator here on Stock MVP, which we'll use in just a second. So EBITDA is at $17.5 billion, which is in itself something that's about to make my brain explode. I mean, 17 billion in EBITDA. And by the way, EBITDA is pretty much how much the company is making before the accountant assholes start finagling the numbers. So EBITDA is where I think it's the most important part. Now, look at these. These are video game numbers. EBITDA growth over the past 5 years is 10,000%. So people talk about Tesla as a meme stock, as a hype stock, retail stock. My guy, if you're hating on Tesla, it's a 10,000% increase in EBITDA over the past 5 years. I mean, that's video game numbers.
And I believe once the Cybertruck comes and is scaled, once cheaper models come, once Tesla storage is scaled, and especially the mega packs, Tesla's earnings are just going to keep on growing. And we are not even getting into full self-driving. And full self-driving does not even need to be solved for it to really have a very big material impact on Tesla's earnings, because once it becomes really good to a point where it can park itself and drive 10 hours without really any significant interventions, then people will just want to buy it just for themselves. But inevitably, robotaxi will also come, I believe, and then that's when the Tesla stock will really explode, in my personal opinion.
Capital expenditures are not small for a company like Tesla. Mind you, the supercharger network is a super capital intensive business. So $7 billion, it's a lot of capex, but it's going to building that moat. By the way, the White House is all gung-ho about eliminating that mode and having Tesla open it up for the public. But guess what? That's what Tesla actually wants, because it's going to generate Tesla a lot more money.
We know for a fact that it will only be some select locations. It will not be every single location in the US. And also Tesla has already been doing this in Europe. So Tesla already learned some of the lessons it had to learn to make sure that the rollout is smooth. And now charging other vehicles will charge Tesla's bottom line.
So the next thing we have to do is run a proper DCF, discounted cash flow valuation of Tesla based on its current numbers. So in the cards, EBITDA growth was 85% year over year, 85%. So in our example, we'll just use 50%. Well, let's just use 50%, which is way below 85%, just to be cautious. Now, CapEx growth was 10%. Let's keep it 10%. Depreciation and amortization, we can also do 10%. And we're going to do populate. And then we do long-term growth rate 4%, discount rate 10%, calculate. Now we scroll up and we find out what's going on. So basically, the DCF valuation we just got was $447 for this company.
So based on these numbers that Tom just input into the model, Tesla stock should already be worth over $400. I don't think that is Tom's personal price target. That's coming up in a few moments still.
Now, we can actually make this a little bit tougher. You can do sensitivity analysis on these DCF models we have at Stock MVP, and you can do 12% discount rate, which means the stock will be cheaper.
Because, for example, if interest rates go up again, and then again, and then again, you will be able to go to a bank and put your money into a savings account and earn maybe 5%, maybe even 6% on your money risk-free. And then, of course, you will want to take less risk. So that's what that number is doing there.
Calculate. Okay, now we're getting $323.
And that's why everyone talks about interest rates, because that previous model said, oh, Tesla stock today should be worth over $400, but then we adjust the discount rate just by a little bit, and here we go. Now it says Tesla stock should be worth over $300 today. And that certainly contributed to Tesla stock going down over the last year. And now here are Tom's numbers and his 5-year bear case, base case, and bull case.
Basically, it has conservative valuations, optimistic valuations, and current valuation. And then you get the 5-year target price, and you get the bear case, the medium case, and the optimistic case. I've already populated it here on the screen. You can see revenue growth. Everything is actually on the conservative side below the current numbers. On the optimistic side, it's right about the current numbers, give or take. So this is what we get. And I actually did this just a second ago. I don't want you to be waiting for me to fill this out. It's on the screen. You can pause it and look at it in a second. Basically, what I'm getting is for the 5-year conservative, which means way below the current numbers, $400 per share, which is an 89%, 90% upside for 5 years at the bear case. At the medium case, $809. At the optimistic case, $1,200, which is an 840% on the upside.
One thing to note here, of course, is that these growth numbers are based on the past numbers. And one way to look at it is to say, well, the past does not guarantee the future. But another way to look at it is, in the past, did we have profits from mega packs? Did we have robotaxis already? Did Tesla already sell HVACs? No. If Tesla has not done these things before, and if Tesla expects to keep growing the EV business still at a very fast pace, then you could perhaps even make an argument that these numbers could potentially, I'm just speculating here, be conservative.
Now look, these are insane numbers, and you might say, well, Tom, this is super expensive. I mean, how can you say $1,200? So look, Peter Lynch talked about it multiple times. Great companies, you probably have like 20 years to buy into them and still make a lot of money. I'm not saying 480%, but I'm saying like if Tesla is a generational company and they're actually going to do what Gary Black says, at least half the stuff he's saying here, they're worth $300, no doubt about it.
And that is why I keep buying Tesla stock. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.